Bring that ass back like a boom, 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 boom.
Hey guys, this is Supernova, your Wing Boom Traders weekly market overview, and we are concluding the first week of 2023, and what a week. Now, before I get going, we have the disclaimer basically stating that this video is for educational and information purposes only, and none of this information is to be treated as a solicitation to buy or short sell financial instruments. Now, usual, we have the session overview, models, market price action, internal sentiment, seasonality, and summary. And I usually have notes, but since this week has been dictated by pretty much a single event, I don't really have notes. Let me just go through this chart real quick with you and show you what Friday's price action was all about. So going from 2000 to 2023, this is the unemployment rate in the United States, and you can clearly see how it coincides with some market crashes that we've had. So the first one right here, you can see strong employment market right here at the beginning of this chart, and then we have the dot-com bubble, 2000, 2002, unemployment spikes. Then it starts to go down, and then 2008 we have the mortgage subprime crisis, and then of course we do have unemployment spiking again all the way up to about 10%, then goes down to about 3.5%. Then we have the COVID crash 2020, and now we are back to 3.5 as level. So you can see that right around here we are at what is supposed to be a very strong labor market, and this is what the Fed has been telling that we need this in order to basically tame inflation and get the economy back on track. So it might actually work. I'm not the one to tell you that we're not going to go into official recession, although I think we're already there, but this strong labor market is showing that the economy is stronger than some people are thinking it is. So this is my only note, the only chart that I want to show you right here. Take it as you may, but the way I see it is that every time we are here, that means we are in strong economy, and that was part of the bullish sentiment on Friday. So now let's take a look at the market outlook. Short term change to positive. Now the overall market is still on red with long and mid term being bearish, but the short term definitely changed. And if we see some push up to some key levels above, when we're talking about the price action, I'll show you what I mean. We might be changing this midterm to at least a caution. The overall market model is still on sell signal. When we look at the weekly chart, you will see what I mean. But the breakout model, we moved it to caution because some of the breakouts were actually working with some strong closing, really high, such as PDD, such as URI, BA, really strong. So we do have some signs that the breakouts are starting to work. Of course, it's very early, so I wouldn't be ecstatic about it, but at least it's a positive sign, something we haven't seen for some time now. So let's take it to the market price section, and I'm going to start with the S&P 500. That's the daily chart, as you can clearly see. So this is what happened on Friday. And with the naked eye, without using any indicators, there are a couple of things right here that you can clearly see. So first, we did have this range that has been going on since pretty much the second half of December. So pretty much about 20 days of sideways action with a lot of chop, pretty much in this zone between 375 and 390. And on Friday, on these unemployment numbers that were lower than expected, we did actually rally. We went back to almost 390, which is this dotted line, which is a key level for us. It's been playing a very important role throughout pretty much half of last year. and we are rallying back up. Now, of course, the 50-day moving average is also coming up right on top of us, and I'm thinking that if we continue with this rally, we can at least get, um, get the rally back to, this is the COVID trend, and I'll show you just a little bit. This is the COVID trend, so from the COVID lows, at least try to hit this one and the 200-day moving average, because this right here is a fast zone. You can see it's a very, very, very fast zone. Elevated volume, no support, no resistance built through such zones. And then we have volume drying off right here at the bottom, and this is usually a sign of a reversal oncoming. And then you can see what happens for the last 6-7 days. We have a majority of in this case cyan volume candles, which is positive volume candles, and we have volume above average on Friday. So this is one of the things that we needed. Now, if you also take a look at the weekly chart, and I urge pretty much everyone to do so, the weekly chart is important to pretty much take a bird's eye the market. You can see this is the COVID trend line from the lows. Of course, you can connect it right here as well, see what that takes you. Another zone of support, of course, if we start going down. But and one more thing that I'm seeing here, right here, we have this right here, so look. So this might be a zone of support, of course, if we start dropping. But what I wanted to point out right here is that you can see we're clearly making lower lows right here, and this is the first higher low on the weekly chart. So this trend line on top, if we break it, that's definitely a bullish sign, but we need to go around 405 to break that for the S&P 500. Still, as I said, it's a positive sign. We're making a higher low. This is a very good consolidation zone right here, 20 days, about 3 weeks, and we are breaking out of it on elevated volume. So that's a good sign for the markets right here. Let's take a look at the QQQ. Pretty much the same thing is happening, but this consolidation is lower than this low. So if you consider back, let's go back to S&P 500. If you consider the S&P 500 something like an invert the head and shoulders, wherein this is like the right shoulder and it is not even able to go as low as the left shoulder, you can clearly see that for the QQQ or NASDAQ, this undercut the left shoulder and it's going down. You can also see that the volume is not as positive as it is with the S&P 500. We have just 1 or 2 days of positive action right here once we're trying to get out of this zone, and I would be very happy if we can go back into the bear flagging pattern right here. However, as we noted when this started breaking down, this is a expanding pattern. This is a megafilm effect, so this is definitely bearish. Now I'm looking for us to be able to go back inside this this bear flag, and you will be able to see it better on the weekly. So this is the bear flag on the weekly. If we can get here and get above the 281, which is our key level right here, that'll be great. We still have this trend line from the highs right here that is pretty much stopping us, plus the bear flag. So at least if we can get above 281, I think that might be some positive development for NASDAQ, but it's definitely looking very weak right now. Now if you take a look at IWM, this is the weekly chart, remember right here, you will see the same thing as with the S&P 500. We are making a higher low, so this inverted head and shoulders pattern formation right here, this is looking better, and we are actually trying to break out of this consolidation zone right here. You can see our key level is 179. If we go above it, then we are clear to take on the 50 and the 200-day moving averages right here. But this is a little bit, although it looks stronger, it's a little bit unorthodox, and it's a little bit hard to interpret. Although these right here all the way up until right around here, we don't have any major resistance. So I think that the path to about 184, 185 is definitely clear to take. So this is for the price section of the three main indices. Now let's take a look at the Dow Jones Industrial. So if we compare Dow Jones Industrial to S&P 500, you will see there's some clear differences the way it's behaving. Definitely Dow Jones Industrial has been the stronger index, um, actually the strongest if you count them as four major indexes. And you can clearly see that where S&P 500, QQQ, and IWM failed, which is the fourth touch of this trend line, Dow Jones Industrial actually moved higher. So make a note right here. So we have the first drop starting beginning of 2021, and then we have these 2022. I'm sorry, and then we have these 1, 2, 3, and on the third time right here, make a note of this candle that is right below the trend line. Now let's switch to S&P 500. And here is the same candle. The next one on Dow Jones Industrial is a strong candle, and you can see what's going on there. So basically the third occurrence, the next candle right here, instead of dropping, it's moving higher, and actually this is the weak candle in S&P 500 that basically set the intermediate bottom, and now we're building into it, where S&P 500 is nowhere near this. So Dow Jones Industrial has definitely been the leader in terms of indices. And now let's take a look at some of the internals. There's some interesting things popping up there. Now, the first thing I want to point out is that we're still seeing that clear leading by S&P 500 compared to Dow Jones Industrial. To Nasdaq, and that's still signaling that the market is weak, especially in terms of the growth stocks that we so much like to trade to the upside. However, I want to point your attention towards the oscillators, and they are in an overbought condition right here. So both of my oscillators are clearly coming to overbought territories. The Zweig bread thrust at 61.5 becomes overbought as well, and the McLean oscillator moved above 100, which also stays a little bit overbought. So I wouldn't be surprised to see a little bit of a pullback come Monday. However, these oscillators are still not overbought to their extremes, so we might still have a little bit more room to the upside, but just be careful. Now, as far as the other pieces of the puzzle are concerned, the put-call ratio is starting to drop a little bit. You can see the 5-day moving average is dropping a little bit. Then we also recorded very positive new highs, new lows, and of course very positive compared to what we've been seeing recently. You can see this red line is the zero point. So both the QQQ and the S&P 500 were positive concerning the net new highs, net new lows. Also, you can see that VIX reversed right here and started dropping again. Now we still want to see it past this trend line right here. As far as the up-down volume and the advanced decline issues, you can clearly see that this week has been more so positive than negative, with those weeks on the upside on the four major exchanges. You can see New York Stock Exchange, Nasdaq, Russell, and Dow Jones Industrial. I also have here the cumulative advanced decline lines for New York Stock Exchange, Nasdaq, and Amex. And right here on top I have the QQQ. And one thing that I wanted to show you is look where Nasdaq turned, and that was in September of 2021. So this is when our first major sell signal came, and later on right here on divergence we had just this drop, but the cumulative advanced decline line on Nasdaq has already turned negative, and that was the first warning sign that we are seeing something brewing up. and not being very good. You can see in July 2021, the advanced decline cumulative line for Amex started declining as well. In New York Stock Exchange was very late. You can see it was um, almost March 2021 when it actually turned. So it's been that's 2022. So March 2022 when it turned down. So New York Stock Exchange was the last one to actually go into the declining territory. So this is not positive or negative. This is just declining and advancing. You can see the green and the red. But this is just something that was a very early warning. We're still seeing not much of a change on this indicator. So as soon as we see something that's improving on the cumulative advanced decline lines, I'll let you guys know. So far, nothing. As far as the stocks above their 50-day moving average in the S&P 500, clearly see we did make a pause right here around the 50% zone. Now we're heading back after this consolidation, clearly following the price action from last week. The stocks above their 200-day moving average, pretty much the same thing. You can see this little consolidation here is mirroring what is happening as far as price action. However, one thing to note, since we're talking about the S&P 500, you can clearly see that this supposedly is the right shoulder of the formation. That's supposed to be a higher low, at least on the S&P 500. But you can see the other lows right here during the year. So this is not how the index looks in terms of price action. So let's just go back for just 1 second on the S&P 500. Let me just move around here. I go to, I think this one. Yeah, this one will do the job. Let's just switch to a daily chart. So you can see on the S&P 500, we're right here, right? So this is the right shoulder. This is the left shoulder. These are lows above the major low right here. And then if we look again at what I just showed you, you can clearly see that we are very high off the lows right here. So this was, if we are to follow, of course, the market, this should have been right around this zone, but this is very extended right here. So I don't think that this is really mirroring what the market is doing. This is a little bit elevated in my opinion right here. So this might signal some sort of discrepancy between the price action and the way stocks are behaving. So going back to the presentation, we do have sentiment changed a little bit as far as stocks are concerned. We're now having fear and greetings from CNN to neutral. It was on fear last week, so quite a jump, more than actually 9 points from last week, which is a considerable jump given only Friday being a positive market action day. And as far as Bitcoin is concerned, or crypto in general, we fell 2 points from 27.25, now in the extreme fear zone, which is a little bit weird as crypto has been actually bottoming out, I would say, on low volume pretty well here. Now of course, with all the industry bugging news coming from different crypto exchanges and liquidity problems, it's expected to have these type of dry downs, but clearly there's no selling pressure right here. So I don't really see what this fear is coming from. Although today we had a chat with Slade in our Discord server that Huobi, one of the big crypto exchanges, might be having some problems. There were news that it's laying off 20% of its workforce. They're based on the Seychelles, and they have around 1,600 people, so 20% of that is to be laid off. Trying to clean the structure a little bit in this bear market, according to the CEO of Huobi. And pretty much that's what I have for you. As far as seasonality, last time I mentioned last week, I'm trying to make this a little bit shorter on this type of data. This week, January is not the best month for the indices. Clearly, The best month for well, it's not the best, but it's one of the good months for Nasdaq. But for the S&P, Dow Jones, and IWM, it's not a good month. So I don't expect great things coming into January. But again, this strong labor data that we got on Friday might be able to propel the market a little bit higher, get back into at least neutral stance midterm as far as some periods are concerned. In summary, the models are on caution. As I said, setups there are some, so I urge you to try some setups. Of course, reduce size, but try to see how the market is treating your positions. The put volume, as I said, is decreasing green because this is positive for the market. Volatility, as measured by VIX, is also decreasing a little bit. So these are good things that are happening right now. And of course, recession, Fed hikes. Last week we had the charts signaling what the intentions or the forecast for the next three Fed meetings are. So we'll see how they come next week. We'll update you on those. If there's something changed, of course, we're going to be talking about. And don't forget that we do have the FOMC meeting coming up. So that's another volatility event for the market. I do hope this was beneficial for your trading. I do hope you find some ideas in these videos and it helps you navigate through the market. If this is the case, please leave a like, subscribe to our channel, comment on, of course, turn the notifications on so you're not missing any more videos that we upload. And you're welcome to join our Discord server, of course. So without further ado, that was it, guys, for now. I'll let you go and I'll see you here next week. Bye bye.